All right, so in this video, we're going to go over the top 5 holdings that make up the largest percentage of my investment portfolio. So let's just jump right into this video. If you're new here, my name's Nate. We come out with lots of different investment, personal finance, entrepreneurship style videos. So if you're new here, definitely consider hitting the subscribe button. Let's just jump right into this video. I wanted to make this video because after looking through my past videos over the past 12, 13 months, I realized that I never quite made a video where I actually talked about the stocks that I actually own. Every month I talk about different stocks I might have interest in. Some of those I end up buying, some of them I end up not investing into. So I thought I would share this with you, the top 5 stocks that make up the largest percentage of my investment portfolio. This is not including mutual funds, ETFs, bonds, REITs, any other type of investment. We're only talking about individual companies here. All right, so let's kick this off with my 5th largest holding, and it's actually going to be Pfizer. And so I believe I've mentioned Pfizer a few other times on this channel, probably when I was talking about dividend stocks, because it does pay a 3.8, 3.9% dividend annually on their stock. And so that's really one of the number one reasons why I got into Pfizer. It's actually one of the very first stocks that I ended up buying back in probably 2010, 2011 is when I first got into it. And since then, it's grown from roughly about mid-20s to mid-30s in terms of their stock price. So it's not a massive, fast-growing stock, but it is one of the largest pharmaceutical companies in the world. Now, one of their major competitors would be Merck, which is actually looking pretty good at the moment. Maybe I'm going to do a comparison sometime. Maybe I'll try to make a video next week on Merck versus Pfizer, but I always end up promising some of these videos for next week and then I forget that I mentioned them. So maybe I should write this down, but I'm going to try to make a video next week on Merck versus Pfizer and different pharmaceutical companies and my views on them. But overall, Pfizer, it's pretty well diversified. They could certainly have some type of breakout drug in the coming years. So that's my 5th largest holding. You might notice throughout this video that a lot of these companies that I'm going to be discussing are actually ones that are relatively stable, somewhat low beta companies that generally don't incur too much risk, because that's just personally how I invest. And I know I could get into some very risky investments and possibly make more money, but I could also lose more money. And so I choose to go with stocks that are relatively stable companies that will be here for the next few decades at least. So Pfizer is number 5. So my 4th largest holding is actually going to be PepsiCo. I'm just going to sort of explain this a little bit here. I'm not going to spend too much time on PepsiCo though, because you probably already are familiar with Pepsi and what they do, but they actually have $22 billion brands, multi-billion dollar brands that PepsiCo holds. So this isn't only beverages, this is actually stemming into the snack industry as well. So most times if you see a vending machine, a good chance that a good majority of those snacks in the vending machine are actually tied into PepsiCo, like they own Frito-Lay, for example. And so they do have their hands in a lot of different areas, and I like that better than Coca-Cola. Now, I know Warren Buffett is a very large investor into Coca-Cola, but PepsiCo is one that I think is a little bit more diversified, and we can get into the whole discussion of the soft drink industry and where that's going in the future. I actually had to write a paper about it in college in 2016 about the soda tax that Philadelphia was implementing and how that's going to affect soda consumption and sugary drink consumption in that city. So there's been this moving trend towards implementing these soda taxes, sort of like what they did with cigarettes. For example, if you go to New York City, you'll see cigarettes for like $15 a pack, and that's because they tax the crap out of it. They tax it so much. And that's kind of what cities are moving towards with sugary drinks. They're trying to fight diabetes and obesity by just taxing the crap out of it and just hoping that people won't buy it because they won't be able to afford it. And there's all kinds of different arguments going both ways with this. It is a regressive tax system, but the plan for it was to wean people off of sugary drinks, but not only sugary drinks, that also included sports drinks, diet sodas, and many other types of beverages like energy drinks, for example. And so that would certainly hurt companies like PepsiCo or Coca-Cola if a lot of these companies, Philadelphia is the 5th largest city in the world, in the United States. And so if a large city like Philadelphia is implementing this 1.5 cent per ounce soda tax on soft drinks and they see it working, they raised $30 or $40 million just in the first year from this soda tax. I think other cities might follow along in Philadelphia's steps, and we saw that the overall soft drink purchasing in Philadelphia, in the city of Philadelphia, dropped by 55%. That's 55%. It dropped almost in half just from the soda tax. So that's certainly something that could affect PepsiCo, Coca-Cola, a lot of these soft drink companies, a lot of these beverage companies. And so I think that could be an issue going forward. And that's why I have slight concerns for PepsiCo in the future. Like I said, though, I think if I see it rise back up to 115, 120, I'm probably going to sell some of it. I think there's some better opportunities out there in some different companies. So I'm probably going to sell a good majority of PepsiCo if the chance presents itself. But if the stock drops below $100, I do think it's still worth it for myself to hold, because I do think that there is still a considerable amount of value within PepsiCo. So my third largest holding kind of has a little bit of sentimental value to myself, and that's probably not a good idea to get attached to your stocks. Luckily, though, I think I'll be able to sell it pretty quickly if need be. But my third largest holding is FUN. FUN, that's actually the ticker for it. It's Cedar Fair Entertainment. This is a company, this is the very first stock that I ever bought. It was $12 a share, 2009, my very first stock. I paid $10 for a transaction fee on E-Trade to get a $12 stock. So that wasn't very bright on my side, but I didn't really know what was going on then. But since then, it's grown to roughly about $64, $65 a share. And the biggest reason why I got into it was because of the dividend. And they're actually still paying about a 5.5% dividend on their stock. And so this is one that's really made me the most amount of money out of all the companies that I've invested into. Cedar Fair was the one that really helped me out the most. And so I poured money into it from 2009 up to 2013. I was pouring almost all of my money just into that one stock. That probably wasn't a good idea. I did not diversify very much in my first few years, but Cedar Fair just actually kind of worked out for myself. And the reason why I got into this, I think I've explained this in a couple of my other videos, and this is kind of a tip for beginner investors, is to, when you're looking for a company to invest into and you're just starting and you might not understand all the weird ratios and metrics that are all over the balance sheets and whatnot. And so if you are a little bit confused by that and you want to still invest into a company, I think the best method is to find a company where you're very close to them, in the sense that either you know somebody who works there, as long as it's not like the CEO or doing some insider trading, you don't want to do that. But if you know somebody who works there, they're an employee, they kind of understand the company culture, or another example of that could be if you're using their products, you're very up to date on what the company's doing, what new products they're coming out with, where they're going to be in 10 years. That's a great route to take. That's what I did with Cedar Fair. It worked out for me. It wouldn't always work out for everyone. I sort of got a little bit lucky with that stock, because not only were they paying like a 6% dividend for the past 9 years, they've also grown from $12 a share to $65 a share. So that was one that really worked out for me. I think at some point I might have to end up selling it, but right now the fundamentals look good on it, and I'm going to hold it for the time being. So let's get into the last two holdings that I have at the moment. These are the two largest holdings that I have. So my second largest holding is Facebook. So they've been having a lot of troubles lately, and that's not something you want to just sweep under the rug. I thought it was going to be something that would sort of just blow over pretty quickly with the whole Cambridge Analytica scandal. In my opinion, when I first saw this come out and the stock dropped a good 10% in the first few days, I thought it was people overreacting, because in my mind, I thought that people, they overreact to these news articles. And in reality, I didn't think that people would stop using Facebook. I didn't think that Facebook revenue would drop. But Mark Zuckerberg and Sheryl Sandberg just said that revenue might be hit by this. And then just before making this video, I logged on to CNBC and I see that there's another issue that Facebook had with another company that said that they were doing surveys and using it for nonprofit, when in reality they were selling it to third-party marketers. So I think Facebook has a lot of problems at this time. I'm going to continue holding because I'm not dropping out at 150. I do think that this company is one that is going to succeed in the long term. I mean, they have billions of people who use their platform. And I think it's somewhat comical in the sense that people, they have this delete Facebook movement and they get mad at Facebook and they post on Facebook about how they're mad at Facebook. And then they say, oh, by the way, I'm moving to Instagram. Well, guess what? Facebook owns Instagram, and Instagram is a very popular platform. It's my favorite social media platform. And if you go around and you take a survey of people, Instagram is most likely their favorite platform. And so it's definitely a trendy, up-and-coming platform. I don't know if it has quite 1 billion users yet, but it's right around that billion user mark. And so very popular. I'm still bullish on Facebook. I think the storm may get worse before it gets better, but I do think in the long run it's going to get better. So there's no point in myself selling at the moment. So my number one holding is PayPal. And my reasoning behind this is pretty simple. So besides the fundamentals that are looking pretty decent, the primary reason why I hold PayPal and it takes up the majority of my portfolio is because of Venmo. This is an app that I'm very bullish on. And so this is in the mobile payment market, and this is a very competitive area, and I think that Venmo really got the head start above anybody else, and I think that they're going to come out on top with this. And so if you're not familiar with Venmo, it's essentially an app. It's kind of like PayPal, but it's more social and it's way easier to use. You can just send your friends money just like that. So I actually learned this when I went to college, and everybody uses Venmo. Nobody uses cash to pay each other. Like, cash doesn't even really exist on campus because everybody just Venmos each other money, and it actually became a verb. You can Venmo people money. And so it's very popular among millennials. Billions of dollars are flowing through Venmo every single month. So it is very popular and it's up and coming. I do really see that happening. And I think the biggest part that they need to do is just to continue to grow and then focus on monetization later on down the road, which they've been planning on doing. So that's the largest reason why I own PayPal, not just because of the fundamentals, but because of the future growth of what I believe their potential is, because the global mobile payment market is very, very competitive. You think about Apple Pay, Snapcash, which is just a joke. I don't know if anybody even knows about Snapcash. You can send money through Snapchat, apparently. I've never used it. I've never met somebody who's used it. But there's a lot of different apps that are sort of coming out trying to compete with Venmo. But I think Venmo got that amazing head start. They have tens of millions of users in the United States using their app. I know that the big banks are all backing this new app. It's Zelle. It's this new form of payments through different banks. You can pay each other through that method, but I don't think that's going to be nearly as effective as Venmo. So those are my 5 largest holdings. Let me know down below what you think about these stocks. I want to hear your opinion. It's always great to hear other people's ideas and opinions on these companies. These aren't necessarily buys. I'm not going to be continuing to reinvest into all 5 of these companies, as I mentioned in this video. Some of the companies I'm going to be weaning off of. Some of them I might be bulking up on more throughout the next few months. But that's it for this video. If you enjoyed it, just don't forget to drop a like, subscribe if you haven't done already, and thanks so much for watching. Really do appreciate the support on this channel. I really do, guys. So I'll see you next time.